Good morning, this is Ryan Mallory for SharePlanner.com. Today is October 29th, 2010. Three more trades this morning, and two of them are profitable, one of them was not. The good thing is that it's alright to have losers in between your winners, but as long as you're coming out on top on the day or whatever time frame you're measuring yourself in, that's what you're aiming for. So today, definitely up strong, despite having one losing trade in there that didn't turn out that great at all. In any case, let's go ahead and look at that first one, DECK. I'm going to zoom in so you can focus on what I was looking at early on. So this is a 1 minute chart of DECK, and right off the bat, you get a solid breakout level here that we're aiming for. We get that right about 6 minutes into the market open. I take the trade without hesitation. However, it was a fake breakout, nothing more. Also, did not do well when it came to the slippage either. I think my order was like 58.05 and my fill was like 58.19. So that was a 14-cent slip that I wasn't happy about either. So in any case, though, we saw some pretty heavy selling right off the bat after we had this fake breakout, and then it basically consolidated the rest of the time. I got out at 57.55. Basically, the reason why is because the stock didn't do what I was expecting it to do. When it does that, when that kind of behavior takes place, I tend to want to get out right then and there. You did have a breakout later on in the day, but seriously, these day trades that I'm doing, I'm not looking at holding them for an hour and a half. So kudos to those that did hold that particular one, but for me, that's not how I'm trading, and I'm looking for fast gains there in the first hour. So if I'm not going to get that, then you know, I'm going to have to move on to the next trade. The next trade was MIPS. Another good chart to trade off of. However, I mean, just like any of these stocks, especially when you're trading early in the morning, even if you get a breakout per se, I mean, that's not necessarily mean that the stock's gonna keep going up for the rest of the day or see a lot of strong price movement the rest of the day. It's just basically meaning that there's enough euphoria right now to break above its opening highs or close to its opening highs, and giving you an opportunity to profit from that move. Oftentimes, the stock comes right back down and goes even lower than where it opened up at. So you have to keep that in mind when you're trading these stocks. I mean, there's a lot of volatility. You got to take profits when you see them. I am always much more comfortable in the trade after I get about half the position off for a profit. Once I can do that, I know I'm playing with the house's money. I can move my stop up to break even, and whatever happens from there, I know I'm walking away with a profit. You got to get that same kind of mindset where you're not trying to figure out how high could this stock go, but instead you're trying to look for how can I start booking profits, and that is what you want to think about when you're getting into these stocks. So in my PS, we have these this early morning consolidation, and this is a good sign that there's a lot of buying pressure when you're just continuing to push at these highs and without much success, but you're still pushing them, and not only that, but then the lows are continuing to get shorter and shorter. So MIPS had a lot of pressure building on it to where when it did hit, you knew it was going to go pretty hard and pretty fast, and that's what we did. So MIPS, I got in at 14.69. I rode it up to my first stop loss at 14.84, or not, my first target or where I took gains from was 14.84. Took half off the table there, and then I took the rest of the half off at 14.95, which is actually at 1 penny off of the day's highs. That was probably my best trade of the day. It wasn't my most profitable trade, but I would definitely say by rating it, my best trade. And my last trade was MWW. Well, before I go to that, I was talking about before, you never know what the stock's going to do for the rest of the day. Look at that there. I mean, yeah, if you would have held it all the way down to 14.26, which you'll never see me doing in trading, you're bleeding quite a bit at that point. But it does come back. But you just have no guarantee of that. So always look to where you can book profits. MWW was the last trade. And this trade was by far the fastest trade of the day. I mean, it was less than 1 minute. And I'll get into that more in a second. But as you can see, another tight consolidation range, one that I really like to trade off of. Broke the highs, got in at 18.55, and literally, by the time I see the alert that my buy stop's been hit, and by the time that I get into it, the stock's already up 40 cents. That was fast. I mean, it was an extremely fast move. So we got in right here at around 9:43 a.m. From there on after, it's just moving up high. I see it at 18.85, and I don't hesitate. I booked gains right there. Sold the whole thing. I didn't even sell half. You get moved that fast. I got no problem closing out the position right then and there. The stock went in as high as 19.10, and then, you know, after that it was just selling and selling and selling. So this is why you get out of the stocks when you can with the profit. Why you cut the winners, or let the winners run and cut the losers short, because the losers can destroy you. So don't think, oh, it's going to come back, it's going to come back, or I just have a good feeling about this stock. Though that kind of feelings, that kind of thinking will destroy your portfolio, and I implore you not to get caught up in that kind of a mindset. The last trade I want to look at is AXTI. I did not get into it. I was busy trading. You know, I can't trade a bazillion stocks at one time. I mean, I got the swing trades going, and I got these day trades going. I can't just keep trying to get in stock after stock, or else I'm more prone to trading errors and everything else. So 1 to 2 stocks at a time is pretty much where I like to call it quits at. But you got AXTI here. If you were trading off of these early morning highs, you got in and you thought maybe you were going to get a false breakout, because it goes up from 765, goes up to about 769, and then it comes all the way down to 755, which would have been probably enough to get me out of that position, because at that point, you're down more than 1.5%. But if you waited a little bit and you played the break of this 769 high, which is probably the better trade to have made, you can see here. So I mean, 769 it hits, and it goes up as high as 818. Definitely should be taking profit around 781 at one point, and then I probably would have been taking off maybe a quarter position here and a quarter position there, since it was showing so much strength along the way. But yeah, the one thing you don't want to do, like the trade like this, it's easy to get caught up. Man, I might be on something special with the AXTI. I mean, this stock could be like the next. I don't know. Maybe it has an Apple story behind it, or a Yahoo story, or a Google story, or something that could really make me rich long term. That is not what you want to do. This is a day trade. Keep it a day trade. Do not turn it into a long-term investment, or even a swing trade. Don't turn it into an overnight trade. You got into it for the specific reason for booking profits within a very short period during a one-day market session. Don't do it any longer than that, because yeah, you might get away with it this time, but you will not get away with it in the future. It will come back to bite you. So just take that as a quick lesson for anyone that was thinking otherwise, and we'll be back on Monday for more day trade recaps. But in any case, jump on over to the chat room. I'm there all day today, and willing to answer all your questions, and willing to help you guys out any way I can.